Hello and welcome to the PINCast, the podcast presented by myself, Richard Bowser, editor and founder of Property Investor News, the monthly magazine which we launched 20 years ago back in 2002. If you want to listen to factual, no-nonsense interviews, insight and opinion from some highly experienced and respected property professionals, then this is the podcast that you really need to tune into on a regular basis. Hello, it's Richard Bowser, editor and founder of Property Investor News and host of the PINCast. Today I'm with a fellow veteran of the property investing and education sector. He's the founder of the Property Investors Network community and PIN Mastermind. And so my latest PINCast guest is none other than Simon Zutshi. Good morning, Simon.
Morning, Richard. Great to have you here in Birmingham.
Indeed, lovely. Simon, we've been together on a journey over the last 21 years with our respective organisations, haven't we?
Yeah, that's right. Time flies, doesn't it? And a lot's happened in those 20 years.
Absolutely. And you and I think we first met at the Property Investors Show at Excel. I think it was 2003.
Yes, it was. Yeah.
Yeah. And so your organisation, Property Investors Network,
yep,
has been in existence now for 20 years, and you're celebrating your anniversary.
We are, right? Yeah. We're just about to have our 20th anniversary dinner. And I say I can't believe where 20 years has gone, and I never thought we would do what we've done in 20 years. I never thought the property market would change as much as it has in 20 years, and it's great to have a chance to reflect back on that and look at some of the changes and think about the impact going forward. And I think there's one thing we have to accept is the market is always going to change.
Absolutely, yeah. When I do PowerPoint presentations at events like you, I have kept exactly the same graphic for my presentations, and it's symbolising on constant change and evolution, and my graphic is a dodo bird, which did not survive a changing environment. So my pitch when I do talks at events is, you as landlords, as property investors, you need to constantly adapt. And that's what you just said, Simon, that this is an ever-changing landscape.
And I think that's why we're seeing so many landlords leaving the market. And you always get some people entering and some people retiring, but there's more landlords than ever before leaving. And I think that's partly as a result of all the change, and some of the landlords are just not prepared to adapt to that, or they think it's not as good as it used to be in the good old days. But there's still lots of people coming in new who want to see the opportunity.
No, well, I mean, property and property investment is ongoing. I'm sure in the Roman times, 2,000 years ago, and there were landlords and there were people investing in property, and I don't think that's going to change, at least probably in my life.
And people will always need somewhere to live. As long as we have a population and a growing population, the demand will keep on going up.
So in the last 20 years, we've seen a boom through until 2008, and then we had the great financial crash and the repercussions from that, and then of course we then had another sort of mini boom up until, maybe one could argue, certainly for London and the southeast, up until about 2015, 2016. And then we had another period where things started to take, but a regional ripple as well. I'm speaking from my perspective as a market analyst. Up until the 2019 election, when things were really quite rosy, property values in many parts of the UK were bouncing back, and some parts which had not done so well economically were on upward curve. And then of course COVID hit, and that another big change which we're still seeing the repercussions of.
Yeah, I mean, I think life has changed so much because of COVID, and we'll talk about a lot of that later on, I guess. But I was expecting before COVID came, I was expecting a price correction at some point, because we'd had that pretty good growth for a number of years, and after any boom, you always have a correction.
Yes.
And when COVID hit, I remember thinking, right, this is it. This is going to cause it. And I know the Bank of England published something saying they thought that property prices could come down 16% because of all the uncertainty. And to be fair, the government stepped in and put some pretty radical things in place that protected the housing market, because obviously housing and retail are the two main pillars of the UK economy. Retail was completely gone, and so housing was the last thing they could hold on to, and they did a pretty good job. And I think with the stamp duty holiday and the bounce back loans, which of course were not supposed to be used in property, so much of that money worked its way into the point where that's why there was this incredible boom.
Now, the numbers escape me, but something like 450 billion was injected into the UK economy, and inevitably that's going to have inflationary consequences. And of course, in the last year or two, in combination with what's the energy problems, as a result of Ukraine. We've had significant inflation, nothing like as much as I recall from probably days gone by, which you may not recall, back in the 70s and 80s.
Bit before more time, Richard.
Yes, indeed. I wasn't going to, but seriously, we've had some inflation. Obviously, we've had the consequences of that. Thankfully, the latest news seems to be that inflation is being now under control, and a more positive outlook for interest rates. As well.
It's a really interesting thing, Richard. We were talking earlier about there's lots of bad news and negative news for property investors, and obviously sometimes people tend to focus on it. I think there's always a flip side. Where there's bad news, there's always opportunity. So there's lots of bad news for investors right now, but I think the next year is going to be an incredible time to invest. But same thing with inflation. And if you think about it, for most people, inflation is a bad thing. But actually, as property investors, I think inflation is our friend for two reasons. And one is that obviously inflation erodes the debt that we all have on our properties. Most people have mortgages, at least in the early days. And so inflation erodes that, which is great. And then also inflation means prices going up, which includes rents. And we've seen massive rent increases, partly due to inflation, but also partly to the number of landlords that are exiting the market as well.
No, absolutely. Certainly what's happened in recent years, there's all sorts of factors around why a cohort of landlords have been exiting the market gradually. Certain parts of the country, from say from 2010 to 2018, some very subdued property markets. London and the southeast recovered quite quickly from the 2008 crash, whereas other parts of the country were much more subdued. But of course, landlords in some of those locations, which from in say 2016, 2017, 2018, all of a sudden they saw prices increasing. I'm talking about the regions, some regions far away from London, and they then, because of what happened with all of the injection of money into the economy post-COVID, they saw a great opportunity to exit the market. And we've seen that, and also just sheer demographics. A lot of older landlords obviously getting to a certain stage of life, and they're going, hang on a minute, I'm a little bit weary of dealing with all these tenant issues, property maintenance issues, ever increasing burden of regulation around the private rented sector, which is ongoing. I personally, I'm not sure what your viewpoint is, but I think the whole professionalisation of landlordism is a good thing.
I think it's a very good thing. I think it's really good. And actually, there's also an important distinction I want to make, Richard, between a full-time landlord, which I think most landlords probably are. If they got a portfolio, that's probably their job. But that's very different from what I do and what I teach my students to do, which is become professional investors. Where actually we have to find the property and set up in the first place, but as soon as we can, we get someone else to manage it for us, because then that gives us time to do what we want to do and enjoy the money we're making with property. And also I fell into what I call the landlord trap, and I think most people do this. I don't think it takes much time or effort to manage a few properties. Yes, there's a lot more legislation you've got to keep up with now, but you can manage a few very much part-time, as I did when I was working at Cadbury's. But then as I bought more and more properties, I spent more and more time managing, and I realised I was spending less time buying. And I think you make the money when you buy, not for managing. But there are so many people who their job is they are a full-time landlord, and I can't think of anything worse, Richard. I wouldn't want to do that myself.
No, I see myself primarily as a property investor. And I say this to people like you do at events, when I'm speaking to seminars and rooms. Focus on what you're good at. Focus on the higher value stuff. That's going to enable you to grow your portfolio and delegate some of the stuff that quite frankly is maybe some of the more negative stuff to deal with, tenant issues, the management of. Leave that to people that have got more skill set and more time to deal with.
They'll do a better job. And I think the problem is sometimes. It might be a bit controversial, but I think many landlords are, what's the word I'm thinking? Tight is the word. They don't want to spend money, and actually it's a false economy. They think, well, I could do that myself. Well, actually, let's say you want to evict the tenants, and you can learn how to do that, but why get emotionally involved in that and upset? Why not just pay someone like Landlord Action or someone like that to do it for you, and it costs you £700, but you don't have to worry about it. They'll do a better job, and you can go and focus on something better, more positive in your life. That's my view.
I completely concur and agree with you. If my management costs me 10%, but I can concentrate on stuff that's going to accelerate my portfolio growth or my rental income or whatever it might be, or actively increasing the value of their properties, that 10% that I'm delegating the daily responsibility of dealing with the tenant issues and the management issues,
it's money well spent, isn't it?
Absolutely.
I think the problem is sometimes people look at the cost of something and not the value.
Yeah.
And it's a kind of mindset thing, really, isn't it?
And
I've done it. We've all done it, right?
Yes.
I've done that, but I think as we develop and become more aware of things, we become aware that actually there were probably people better than us at doing things.
Yes, I agree.
And there were better ways of doing things. And if we're narrow-minded and try and do things always the same way, we're not going to progress. We've got to evolve. We've got to adapt. Yeah. Otherwise, we get left behind.
Indeed. So, Simon, in the last 10 or so minutes, we've covered 20 years.
Yes.
And we've focused on some issues which we both seem to have agreements on between us. But just remind listeners to this PINCast of your individual journey. Now, we've covered it in an article a few years ago in Property Invest News, but a quick summary of what you personally and the launch of Property Investors Network. Yeah, and obviously this 20-year period since you launched it.
Very briefly. So I started. I became an accidental live-in landlord, if you like, because I bought a house in '95 when I started to work at Cadbury's as a graduate trainee, and the place I bought was a 2-bed, 2 down house, and because I'd been a student living with other people, I wanted to have some friends living with me, and so I got 2 friends who were still at uni, and the rent they paid covered the bills and covered the mortgage, so I'm kind of living for free. And I was saving lots of my salary, and I had a part-time business running nightclub events in Birmingham. So very quickly I built up another deposit to buy my second property. And I moved out of the first one into my second one. That was in 1998. So from 1998, 25 years ago now, yes, I've been an HMO landlord, renting to students.
In and around Birmingham?
In Birmingham, because I've got very bad eyesight, so I can't actually drive. So everything was in cycling distance was my initial portfolio. And I realised that first property that I was renting out from 98, I was making about, as a minimo, 3-bed HMO, and the tenants pay all their bills, as they do sometimes student properties. I was making about £500 profit a month. And it would only spend me 2 hours to do that. And I was working at the time only £1,500 a month, 200 hours. I thought, I've got to do more of this property. So to cut a long story short, I started to buy more. In 2001, I was able to leave my full-time job, and by 2003, I'd completely replaced my income. Right. And I realised I'd done quite well, but I made lots of mistakes, Richard. I thought, wouldn't it be smart if I could learn from other people? So I went online to do some sort of group. There was nothing at all. So that's when I set up PIN, Property Investors Network, in 2003.
So that's 20 years ago.
20 years ago.
Yeah.
Started with one meeting that was self-interest. I just wanted to meet other investors.
Indeed, yes.
And then I realised other people were saying to me, Simon, how come you don't have to work? And I started saying, and actually I realised that's my passion. If I had to choose teaching people or investing in property, I would dump the property. I'd choose teaching people because that's what I love to do. And I realised that I loved it, and I've become, if I say so, pretty good at it over the last 20 years.
Well, the evidence is very clear.
Well, we have a lot of successful people, right, who've learned what to do.
We featured many of them in Property Investor News, and their stories and their successes over the years, and some of them have started off very small scale investors with 1 or 2 properties and are doing some amazing things. Obviously, some have also fallen by the wayside, but that's the marketplace.
Yeah, absolutely.
Yeah. People, unfortunately, sometimes are I call it the Icarus syndrome. They fly too far, too quickly.
Scale too quick.
Yeah. And that is an issue when you are scaling, as you just said.
Absolutely.
So clarify where the organisation is now today, Simon.
So where we are now, 20 years on, I never imagined this would happen. We have 50 meetings around the country. Most of those are physical. Obviously, everything was virtual during COVID, and I could see that coming. Well, we had a big event in March 2020. And it was like a 400 people event, and it was a couple of weeks before the announcement, and we made sure everyone had the hand sanitizer, and touch wood, no one got ill from that, which was amazing. 2 weeks later, different story, and I could see it happening, and Donna, who's in my team, who runs PIN, I don't really run it. I spoke to her, I'm very full credit. I mean, by the way, I need to say, we have an amazing business, but it's down to all the people in the business. All our PIN hosts, all our coaches, all my team here in the office, as you can see. I couldn't do it without them.
No, well, I mean, I've known Donna and Andy Haynes, for a decade, more than a decade.
And I think it's an important lesson for anyone listening to this, don't think you have to do your property investing on your own. You have a team. You have your letting agents.
Yes.
You have your mortgage estate agents. You have your handymen. You got your mortgage broker. They're all your team who can help you achieve what you want to achieve in property. It's good to recognise them. So we have a few virtual meetings still. We've now gone to the UAE, so we have a meeting in Dubai once a month, and now in Netherlands as well. And the plan is to grow that around Europe. As you know, I don't own the business anymore. I actually sold it 18 months ago, and I'm staying on as CEO, partly because I love what I do, but they want me to expand the business internationally.
Okay, right. So that is the plan.
So that's
international
the plan.
expansion.
That's the plan. International expansion. Yeah, I think we probably have enough coverage in the UK.
Yes,
now.
indeed. Yeah. And obviously your success has sort of led on to others trying to emulate and seeing what you're doing.
Yeah,
inevitably. And that the flattery is flattery. Whatever.
It is, and I think probably half the people out there training other people have actually done my property mastermind program or some sort of training with me.
Yes.
That's fine. Or and half of them have worked with someone like Progressive Property. You know.
Yes.
So there are a couple of big, long-standing education companies. And look, I think competition's good.
No,
right?
well, it keeps us all on our toes in whatever market you're in.
It does.
Yeah.
And people say to me, "Oh, how are you different from someone else?" I said, "Well, you should go and listen to other people, and you should see who you resonate with. But also, it's important if you're going to go and get someone to teach you, you want to make sure that they've got a good breadth of experience. They're not just one or two properties ahead of you, which some people are sometimes. But also, you want to make sure that they've got a lot of successful students, because there's a big difference between someone being successful themselves and then being able to teach other people how to do that.
Indeed, yes. No, well, I again concur with you. In any business, you want to be looking at the people that can demonstrate clear evidence of achievement, but at the same time, their ability to pass that knowledge on is a skill set that some people don't have. In many walks of life, professional footballers, maybe fantastic footballers, but just don't have those personality traits to be able to teach others those skills. And
unfortunately, in any industry, there are, people sometimes look at property education and think it's all the same. It's not all the same.
No. And
there are some people who do things well, some people who do things not so well. And so you just need to do your due diligence and ask around.
Yeah, absolutely. Well, as we know, in the 20 odd years since we've been respectively exhibiting at the Property Investor Show and other events, we've seen some people come into this marketplace and make very significant errors, not necessarily immediately, which then cost their customers lots and lots of money, and many people listening to PINCast will be very well aware of that. Unfortunately, property attracts some rogue traders, doesn't it?
Well, any industry where you can make money does that, and it does attract people like that. And I think because it's such a, they don't teach you this in schools.
No.
So most people don't know about property. So there is a big need for people to learn. And I think most people are kind of open to, smart people recognise that, why would you try and do something and reinvent the wheel when you can find someone else who's already done what you wanted to do and get there much quicker?
Absolutely.
And so, and it's interesting, in times like we have right now where the market's coming down, you and I both recognise that it's an incredible, there are challenges obviously, but it's an incredible opportunity, and yet most investors are probably waiting by the side to wait and see what happens. And I know Ranjan Bhattacharya very well. Ranjan and I are of the absolute same opinion, as is Mark Homer from Progressive Property. But this next year is probably an absolute golden opportunity to get out there and acquire some really good property deals.
Absolutely. So let's talk about that, comparing where the marketplace is now, because we can talk about history, we can talk about our respective organisations' growth, etc., but that's in the past.
Yes.
We are where we are, and landlords today, property investors today, the UK economy, the global economy, interest rates, all of these, but it's what does the next 12 months hold, and where are the opportunities now?
Okay.
Would be something I think people listening to this would really want to zero in. You've mentioned Simon, Mark, and Ranjan, and of course Richie Clapson, who you guys work with. And they are highlighting opportunities. So tell our listeners.
So I believe there are definitely opportunities in the taking commercial property and repurposing that into residential. There's really high rental demand in most areas. So I think that's definitely a really good strategy. I also think there's but that can take a lot of money.
Yes. That's the thing, isn't it?
And you definitely, if you're doing commercial to residential conversion, that is not the same as doing a simple house refurb. No. And I think a huge mistake people make is they see the big money you can make from that, and they get attracted, and they don't realise it's a completely different learning curve. So I would suggest, if someone's experienced, you should definitely be doing property development at some time, but in the right time in your journey. Yeah. If someone's fairly new to property, I think it's more important to get cash flow coming in and generate a stable base to give you that certainty. And I think in terms of strategies, there are probably two key strategies for the next 12 months I think are really good. Mm-hmm. I think HMOs, there'll always be a good demand for them. However, Richard, just to be really clear, it's not average HMOs.
No, there's a lot of dross out there, isn't it, in the HMO market?
And I think HMOs have a bit of a bad name because of that. I'm talking about very high-end, quality HMOs that you and I would be happy to live in ourselves.
No, absolutely.
They look amazing.
Yes.
You have a discerning tenant who's prepared to pay more. By the way, it's still more cost effective for someone to live in a great HMO than it is to rent on their own and pay all their bills. So it's still cost effective, but they get this community. And I think that for me, the difference between an HMO where you've got a room in a house and a co-living community is you're buying into that community of like-minded people. I don't have kitchenettes in my rooms because I want them to use the kitchen and cook and eat together. It's
you want
community
people to effectively cohabit.
Absolutely. Yeah. And so I think that's the evolution of HMOs.
No, I agree with you. I've seen some great examples of what you've just talked about in the last 12 months. We've got one just about to feature in the latest Property Investor News and others, and some of your mentees, your Property Investors Network masterminders also producing some great products, which is exactly where the marketplace should be going.
Yes, there's so much, we should raise standards.
Yeah, absolutely.
We should raise standards.
Yeah, I mean, there's so much criticism around the private rented sector, the Renters Reform Bill. You've got organisations that are scathing about private landlords, but
ironically, sorry to interrupt, but ironically, often council-owned properties is just as bad or even worse than private-owned. There are definitely bad private landlords, but council-owned properties are sometimes even worse.
Yes.
But the point is, we should, as professional landlords, be providing high-quality accommodation. And if you do that, if you look after your property, which we should look after our investments, you attract a better type of tenant. And yes, there are some challenges sometimes, but it's the right way to do it.
Absolutely.
And so here's an opportunity for everybody listening to this. Because there are so many old school landlords retiring, maybe because of just age or because of the changing market, I think there's a huge opportunity to pick up, particularly north of the Midlands, existing HMOs that already have all the fire safety and everything in place, they're already licensed, and just give them a cosmetic refurb, make them look much better than they are at the moment. You can raise the value, raise the rents. That's a huge opportunity. Doesn't work as well down south because values are such that landlords are expecting about getting higher, and you don't get the kind of return on investment you're looking for. And I think down south you do a slightly different strategy where you might look for deceased estates where you can buy them, take them back to brick, and then create a lovely co-living property from that.
Yes, I mean there's a big difference between a property in Mayfair, Knightsbridge, central London, or somewhere near where I live, where you've got in North Oxford, Jericho, 2-bedroom terrace houses at £1 million. And I rent similar types of properties up in the northeast that today would sell for £60,000 or £70,000. Yes. They're exactly the same properties. Yeah. Very different marketplace. Yeah.
Absolutely. So you have to adapt your strategy to the area in which you're investing.
Yes.
The way you do it. But and I believe that investing works everywhere as long as you find the right niche within that market. The other opportunity, and again, it's interesting that when you look at the supply of accommodation is probably contracting, and it has been pretty much since 2015 when Section 24 was introduced. They announced it was going to come in. So the numbers have been contracted. So the supply is going down, demand's increasing. So it's a great thing to get into. And on a similar note, I think the world of serviced accommodation is an interesting opportunity because regulation is coming to that market, and it's about time. It's a real Wild West at the moment. I think it's a good thing to have regulation. It's going to clean the market up, but it's going to put a lot of amateurs off. And I think there'll be a reduction in supply of that, but still increasing demand.
I think the regulation around short let, serviced accommodation, furnished holiday lets, different terms for pretty much, which is this,
very similar.
The same business model, absolutely. I mean, obviously, we're seeing an extreme occur in Scotland, where there's probably going to be some quite dramatic consequences up there for the short lets market.
Well,
whereas, let's hopefully,
I think
in England,
they'll learn
common
from that.
sense is going to be applied. Otherwise, there could be some trickier times. But again, it's about acknowledging what's coming and positioning yourself.
Absolutely.
And in terms of the type of stock that you'd be looking to acquire to bring that type of model into play.
We don't quite know what's going to happen yet, but my guess would be I wouldn't be surprised if you had similar safety requirements to HMOs.
Oh, absolutely, you should have.
And I think you should future-proof by setting things up in that way, even if they're not there. Definitely do that.
Right.
I also think things like, if you have a block of flats, it's a bit antisocial to have one flat in there that's short-term rents. And if you own the whole block, that's a different matter. So I think it's just thinking smart and thinking about, what's going to minimise effect on neighbours and
that's the
surrounding area.
That's where some of the negative press around service accommodation at the Airbnb type market is, as you say, you've got a block of apartments, and 10 or 15% of them now are short lets. And some of them are short lets without the appropriate mortgage, without the appropriate insurance,
or
licensing,
the lease,
lease, etc. And so people are, knowingly or unknowingly, are in breach, and therefore could have some consequences to fail. Whereas, as you say, if you've got a whole block or a converted property where all of the individual units within that are, are short lets and set up in a professional manner and run efficiently, then obviously that can be a great investment opportunity.
It's like anything, Richard. When new legislation comes out, people think, oh my God, it's the end of this, we can't do this. And you just have to adapt and you have to learn. And if you have a professional mindset and you're always looking for the opportunity, there's always going to be an opportunity, in my view.
Right. So, Simon, you've identified, and I agree with everything you've said, surprisingly, commercial property conversions, particularly as a result of the evolution of what's happening with technology and retail, the high street.
But you've got to have the specialist knowledge to do that, because it's definitely a more advanced thing to do.
HMO market in particular, being able to take on stock which has been serviced by older landlords that are exiting the market or tired, just want to get out or want to step back. Clearly, there's opportunities to use more creative strategies around that. Using, the creative contract type that you teach on Mastermind.
Let's touch on that for the moment, because I think this is an area that some people are just totally unaware of, or they're closed to.
Yes.
People think you have to put in a deposit, you have to get a mortgage. Well, that's obviously the vast majority. But in times like this, and this, I'm sure you remember, Richard, back in 2000, when it was difficult to get finance, because some of the lenders just stopped lending, right? Yes. And we were using a lot more creative strategies like purchase lease options and vendor finance. And you can use them all the time, but they're easier in a falling market. And so actually finding out about those strategies right now, because in the right circumstances, they don't work all the time. In the right circumstances, they can be an absolutely better for the seller than a conventional sale. For example, if we do an option, we could give someone potentially more money than they would get if they sold it right now. They'd probably have to sell at a bit of a discount in a falling market. As long as they don't need the money now, which many sellers do, but not all do. Landlords retiring may not need the cash. They're going to put it in the bank, get no return. We can give them a better return, take away the hassle, and we can do the transaction in a matter of 3 or 4 weeks, obviously always through solicitors, rather than a mortgage that might take 3, 4, 5 months in the current market. So it's about, again, recognising that if you have one tool in your toolkit, if you have a hammer, everything's like a nail. And that's not a good solution. You want to have a number of different tools. So when you're speaking to a seller, ideally a motivator seller, you can help them find an ethical solution to solve their problem, give someone what they want, they're more likely to give what you want.
And these are strategies that you teach on Mastermind, but also you do individual programs, don't you?
We do have training. And even just in my book, Property Magic, we're bringing out a 7th edition that will be coming out in 2024.
Wow.
And we talk about options in there. We touch on vendor finance, and obviously you can't teach everything in a book, but we have training programs. And sometimes, Richard, people look at the cost of education. Oh, that's expensive. And I'd say, well, there is definitely an investment, but I'm sure you'd agree, ignorance and making mistakes is far more expensive than training and learning how to do it properly.
The cost of ignorance can be way more than the cost of some property training. And
absolutely.
I completely agree.
And look, we as we said before, not all property trading is the same. So we offer money back guarantees on ours after a certain amount of time. If you don't think it's what we said it is, just let us know, we get your money back. So
you've I think from memory, that's been
it's always the way we've done it. Yeah,
in any of your programs, I think at the end of the
apart from Mastermind,
right, of course,
because on Mastermind it's a year-long program, and we can't guarantee what someone's going to do. But everything else we've got money back guarantees.
Yeah, Simon. So we talked about the landlord exodus, if we could use that phrase, and also people with outdated properties or just tired of the day-to-day. But let's talk more about some of the reasons why. And politics plays a big part in, I think, and political manoeuvring, policy decisions that have been made. You've already mentioned Section 24. Obviously, that's had a big impact.
Yes.
But now we're seeing the Renters Reform Bill work its way through Parliament. A lot of that is now law. There's still stuff that's being discussed, such as the potential abolition of Section 21.
Yes.
I am aware of something that's coming up next week, which might just change that. But there are clearly politics around property, and particularly around the Renters Reform Bill, which has been described as the biggest change in the private rented sector now in 30 years. And of course, we've also got an upcoming election in 15 maybe months' time. Your thoughts around politics and property? Well,
it's interesting. I mean, it's supposed to be a free market, and someone like the Conservatives are supposed to encourage entrepreneurship, but the policies they've had since they've been in power don't seem to be supporting property investors and entrepreneurs as we are, and they seem to be, I think, misguided actually towards trying to get votes from tenants.
No, well, it is a reality that there are 11 million tenants, and
Yeah, but are they really going to vote Conservative anyway?
No.
They're probably going to vote Labour, really.
They've certainly,
and we are generalising, obviously.
We are, absolutely, but they've certainly alienated the 2.5 million landlords.
Yeah.
Certainly portfolio landlords.
But will landlords vote for Labour? That's the thing. I mean, I guess people are worried about what's going to come. There's an interesting point, actually. Both political parties agree that there's a shortage of accommodation and things need to be done about that.
Yes.
The Keir Starmer the other day was saying if Labour got into power, they were pledging to build 1.5 million households over the next 5 years, which is 300,000 a year, which, by the way, is the same number the Conservatives say we need. So they were agreed on that. But Richard, we know we're building nowhere. I think we'll probably build maybe 150, maybe 160,000 this year. Best case scenario, 200,000 is what they got up to. Where are we going to get these properties from?
Well, who's going to build them?
Who's going to build them? We don't have the skills. We don't have the materials.
No.
So it's a bit of a false promise.
Absolutely.
And it's never going to happen. And people make lots of promises and things of what they're going to do. But there is a big shortage of social housing, and there has been for many, many years from both parties. I'm both guilty of that. Yes. And so what we need to recognise, if this country continues to be the popular place it is to live, with increasing immigration, increasing life expectancy, population keeps going up, there's not enough accommodation. Thus, long-term property price go up, which is why I'm not worried about this short-term blip in prices. And I think people should really make the most of getting as much as they can the next year or two, because price is going to go up again, rents are going to go up. And if you see this as a long-term business, which I think you should see property as long-term,
absolutely.
There's never been a better time to get in. No matter what happens on the political front.
Yeah. So my view around the political side is, yes, we're going to have an election, but I see some signs of common sense that have been applied by Starmer. I completely agree. Talking of building 300,000 a year homes, and we've been building, 150, 175, 200,000, nowhere near enough. So we've just got this ongoing supply shortage. Absolutely.
And it talks about, they talked about wanting to make it easier planning wise. And we've seen lots of changes to permitted development. But here's the thing. It's not the planning law needs to change. It's they need to support the councils. They don't have enough staff to actually process all these applications. That's the real problem. And many of them are still hiding behind COVID as an excuse.
Yes. Oh, no. I mean, listen, I can remember going to conferences 20 years ago in the industry, people talking about the shortage of planners. And it's just got worse. And of course, the whole working from home phenomenon is probably accelerating that.
Slowing everything down, isn't it?
Yeah, exactly. And again, you mentioned earlier about sort of regional divide, London compared to the Midlands and the North in terms of opportunities going forward. Now to put together a project down in London and the inner southeast within the commuter belt, the cost of land, the sheer time it takes to put anything together because of planning, the hurdles that property developers have to jump through to get something out of the ground, or to start getting something out of the ground, never mind actually building. So these are real barriers to entry. So talk of 300,000 a year. I'm sorry, it's pipe dream stuff. Happen, is it? No. Which, of course, continues to re-emphasise the point that you've been making, and I agree with, that this is a great opportunity period that we're into, and this is a marketplace that people shouldn't be getting out of. They should be just reconsidering what they're doing, and maybe changing tack a little bit. Yeah,
maybe adapting and adjusting, as we said earlier. Yeah. And I think a key thing that many property investors can do, majority of whom have single-let properties, they should maybe look at their properties. Some of those could be repurposed. They could be turned into HMOs if they're big enough, or they could be maybe in the right location, right kind of point, turned into serviced accommodation. I think any landlord listening to this should really look at their portfolio and say, are they really maximising it, and are they meeting the current demand and the future demand in the market?
That again plays to what you said earlier, because I agree with you, but at the same time, due diligence, thorough research, particularly in the higher value areas now, where margins in terms of income are not what they were, and therefore to put together a project which is actually going to make a decent margin, and of course using debt, which of course now is more costly than it was a year or two ago. It means that level of professionalism, that level of analysis, that level of due diligence to make sure that you're going to getting into something that's going to produce a good long-term rental income and obviously capital growth as well over time.
So it's a huge opportunity, but you need to upskill to make sure you're making the most of that.
Yes.
Yeah, definitely.
No, I think we're on the same page.
The final thing to touch on that I think is important that we should think about is the impact of AI.
Yes.
It just in two simple things. I think we need to recognise that robotics and AI is going to affect the workforce. Yes, there'll be new jobs created around that industry, but I think a lot of traditional jobs are going to go.
Yes.
And so you've got to think about what are people going to do for money, and how's that going to change society. But the important thing to remember is no matter what people are doing, they will always need accommodation. But maybe there might be a shift towards more people relying on the state to help provide that accommodation, which is my final thought, really.
Well, we will always, to my knowledge, need a roof over our heads to sleep at night.
Yeah.
So that's not going to change. Interestingly, we're just about to publish an article, our take in Property Investor News on AI and how it's going to impact the property market. And one of the niches that we've highlighted is the planning system and how AI can revolutionise the planning system and enable decisions to be made much more efficiently. So
let's hope so.
If that plays out, which is one of the things that we've mentioned in this article, then yes, that could be. But no, I mean,
I wonder also the conveyancing process. The conveyancing process is actually archaic at the moment.
Absolutely.
And I think that's partly due to the processes, but I think also it's partly due to the people doing it, unfortunately. And actually, I think that industry is ripe for disruption, and I think AI could absolutely do that as well.
Indeed. Well, some great comments there, Simon. To summarise, as you say, we have together individually and our respective organisations seen opportunities and challenges, risk and reward played out over 20 odd years, and where we are now in 2023, both of our organisations are still offering a service to our customers, and there will be further challenges ahead.
Richard, thank you for asking me to share. It's been an honour to be here. And
likewise,
here's the next 20 years.
Indeed. Thank you, Simon. Thank you for listening to this latest PINCast from Property Investor News. Make sure you've subscribed to be notified when the next episode is released. Register for the PIN e-news service at www.property-investor-news.com, where you can also sign up as a magazine subscriber and get the monthly print magazine. By subscribing to the magazine, you can get access to 17,000 articles which we've published in the last 20 years, alongside some 300 webinars and video interviews.